Most investors fail. It is a harsh truth, but one we must face head-on. They don't fail because they lack intelligence or ambition. In fact, many are incredibly smart and driven individuals. The real reason for their downfall is far more subtle yet powerful. They are playing a game with the wrong set of rules. They have been led to believe that investing is a sprint, a mad dash for quick profits driven by adrenaline and gut feelings. This flawed approach, glamorized in movies and social media feeds, sets them on a direct path to disappointment and significant financial loss, leaving their dreams of wealth in tatters. The financial world is saturated with noise, a constant barrage of hot tips, overnight success stories, and promises of guaranteed high returns. This creates a powerful illusion, a mirage of easy wins that lures countless aspiring investors into a dangerous trap. They see others seemingly getting rich quick from a volatile stock or a hyped cryptocurrency, and they feel the intense pressure of missing out. This fear, often called FOMO, clouds their judgment, compelling them to make impulsive decisions based on fleeting trends rather than solid, time-tested principles. They jump in blindly, hoping to catch a wave, but often find themselves caught in the undertow. We are conditioned to chase excitement. The idea of a slow, steady climb to financial freedom can feel boring and unappealing compared to the thrill of a speculative bet that could double your money in a week. This is the core of the problem. Many investors are not investing at all, they are gambling. They're placing their hard-earned capital on high-risk ventures without a deep understanding of the underlying assets or a clear strategy for managing potential downsides. They are following the herd, guided by emotion and market hype, which is a recipe for disaster in a field that rewards logic and discipline above all else. The myth of the overnight millionaire is perhaps the most damaging narrative in modern finance. It suggests that wealth creation is an event, not a process. This misconception encourages blind risk-taking and discourages the very qualities that build lasting fortunes: patience, diligence, and strategic thinking. By following these broken rules, investors are setting themselves up for failure before they even place their first trade. They are building their financial house on a foundation of sand, destined to crumble at the first sign of market turbulence. But it does not have to be this way. Let's fix that. Imagine a deliberate, strategic method to building wealth that stands the test of time, creating a legacy of financial security. Grounded in data and discipline, true wealth is cultivated over decades. Tune out the noise, focus on a solid strategy, and embrace the role of a business owner. This is the blueprint we will explore, dismantling myths and building lasting prosperity. Implement a system that works, manage risk intelligently, and let your investments compound. We will reveal the winning formula, looking at how billionaires invest with reliable growth strategies. Stop following the crowd and build lasting prosperity. The first myth: big rewards only come from big blind risks. Popular culture glorifies recklessness, framing it as courage. New investors internalize this dangerous lesson, believing playing it safe is for the timid. This mindset is high-stakes gambling disguised as a sophisticated strategy. Calculated risk involves research and understanding the downside. Blind risk is driven by hope. This ignores due diligence, like navigating a minefield with your eyes closed. We hear about the one winner, not the thousands who lost everything, creating a distorted view. Successful investors are expert risk managers, prioritizing capital preservation. They analyze opportunities and diversify portfolios. To win long-term, reject the gambler myth and adopt a disciplined business owner mindset. The second myth is chasing the latest trend to get ahead. The market constantly churns out narratives about the next big thing, creating urgency. This leads to buying high and selling low. By the time the average investor hears about it, the price is unsustainable. You're investing based on market sentiment, betting the momentum will continue without understanding why. When the hype dies down, the stampede for the exits begins. Successful investors ignore the hype. They focus on sound businesses trading at a fair price. Lasting wealth comes from owning quality assets long-term. Resist hype and anchor decisions in data. The third myth is the illusion of speed. We live in a world that celebrates instantaneous results, conditioning us to expect immediate gratification in investing. Many new investors expect significant returns within weeks, obsessively checking portfolios. This impatience sabotages long-term success, leading to poor decisions like abandoning good strategies for volatile stocks. This constant churning prevents benefiting from compound interest, the most powerful force in finance. Strategic patience means sticking with your plan through market ups and downs, thinking in decades, not days. Overcoming the illusion of speed is a significant mindset shift, separating speculators from wealth builders. The myths of blind risk, chasing trends and demanding instant results lure investors with promises of shortcuts, but they almost always end in regret. Recognizing and rejecting these myths is the first step toward real success. Instead, build your approach on proven principles. Master calculated risk, never invest in what you don't understand, and always know your downside. Shift from gambling to strategy, measure and control risk, don't just hope for luck. Ignore market noise, focus on fundamentals and data, not hype. Develop the discipline to buy when others are fearful and to question euphoria. Root your decisions in logic, not emotion, and you'll spot opportunities others miss. Embrace patience and the power of compounding. Wealth is built over years, not days. Replace myths with evidence-based methods, and you rewrite the rules in your favor. This is how you set the stage for sustainable, lifelong success. Leverage, using borrowed money to invest, can amplify gains, but it magnifies losses just as quickly. Overleverage strips away your ability to withstand volatility. A small downturn can wipe you out. When you borrow, you're at the mercy of lenders and margin calls, often forced to sell at the worst time. Take real estate. A highly leveraged investor may feel brilliant as prices rise, but a small dip can erase all equity and trigger foreclosure. The core mistake is using leverage as a shortcut, driven by greed and impatience, not as a strategic tool. Over-leveraged investors have no margin for error. A minor setback becomes a crisis. Successful investors use leverage sparingly, ensuring their finances can weather storms. The goal is to stay in the game long-term. Over-leverage is the fastest way out. Don't let the promise of quick gains blind you to the risks. Use leverage only when you can afford to lose, and always protect your downside. Emotional decision-making is the silent saboteur of investing. Our instincts, greed in bull markets, fear in downturns, push us to buy high and sell low. Greed convinces us to chase hype and abandon discipline, while fear drives panic selling at the worst moments. This emotional roller coaster is the main reason most investors underperform. The market is neutral, it's our reactions that determine our fate. The best investors aren't emotionless, they have systems to manage their emotions. They create clear plans before investing, using those plans as anchors when emotions run high. Discipline and preparation, not gut feelings, separate winners from losers. Master your emotions, and you master the market. Success starts with a plan and the discipline to stick to it. Most investors obsess over what to buy, but neglect planning when to sell. Without an exit strategy, you're flying blind. Profits evaporate and losses spiral. A clear rule for taking profits removes emotional guesswork and locks in gains. Equally important is a stop-loss. Decide in advance how much you're willing to lose. This isn't panic selling, it's disciplined risk management. Without these rules, hope replaces strategy, and losses can become catastrophic. Don't double down on failing investments. Cut losses quickly and move on. An exit plan defines both your profit target and your maximum loss. It keeps ego and emotion out of your decisions. Operate like a professional, always know your exit before you enter. Over-leverage, emotional decisions, and no exit strategy form a vicious cycle. Greed leads to risky bets and borrowing, magnifying exposure. Without an exit plan, investors freeze when markets turn, hoping for a rebound. Losses mount, panic sets in, and forced sales lock in devastation. Each mistake amplifies the next. Emotions drive leverage, leverage magnifies losses, and lack of planning leaves you paralyzed. The cycle ends with buying high, selling low, and losing confidence in investing. Breaking free requires discipline, avoid shortcuts, manage risk, and always have a plan. Recognize how these failures connect, and you can stop the spiral. Build systems to counteract emotion and risk, and you'll stay in control. Success is about breaking the cycle and investing with intention. The key to long-term success is to proactively build a defensive framework that protects you from your own worst instincts and the market's volatility. This framework becomes your shield, allowing you to operate with logic and discipline. First, create a strict policy for leverage. Invest only with capital you own outright. Second, externalize your decision-making process to combat emotion. This means writing down your investment plan, outlining your goals and risk tolerance. Finally, your framework must include your predefined exit rules for every investment. Before you buy, know the conditions under which you will sell. By building this defensive framework, you are engineering the conditions for your own success. Now that we have dissected the anatomy of failure, it is time to build the architecture of success. The average investor is drowning in a sea of noise. The first rule of the winning formula is to tune out this noise and focus exclusively on the signal, the underlying verifiable data. Is this a good business? Look at the company's financial statements. This is not glamorous work, but it is the only way to form an independent opinion. Ask for the evidence. By grounding your decisions in objective data, you insulate yourself from the emotional manipulation that leads so many others astray. Create a simple checklist for every potential investment. This systematic approach forces you to focus on the signal. This discipline is the first pillar of the winning formula. The second secret of wealthy investors: buy boring businesses. Look at Warren Buffett's holdings: insurance companies, railways, and soda manufacturers. These generate wealth long-term, with durable advantages, predictable cash flow, and steady growth. Boring means predictable and resilient. Their predictability allows for reliable compounding. The smart money accumulates shares in these cash-generating machines. Own a piece of a high-quality enterprise that will work for you for decades. Scale smart, don't go all in. Use dollar-cost averaging, invest a fixed amount regularly, regardless of price. Be greedy when others are fearful. This builds wealth with patience and compounding. The final pillar of the winning formula is a radical expansion of your time horizon. To build generational wealth, stop thinking like a trader and start thinking like the founder of a dynasty. Measure your investment timeline in decades. This long-term perspective is perhaps the most significant competitive advantage an individual investor has. By adopting a multi-decade mindset, you fundamentally change the game, aligning yourself with long-term compound growth. Thinking in decades neutralizes the psychological impact of short-term market volatility. A long-term perspective reframes every market crash from a source of fear into a source of opportunity. This mindset shift separates investors who panic sell from those who calmly buy, laying the foundation for their future fortune. Ultimately, thinking in decades means you are planting trees under whose shade you may not sit. These three principles: following data, buying boring and scaling smart, and thinking in decades, are not separate tactics. They are interconnected components of a single, cohesive blueprint for investment success. They work in harmony to create a powerful system that is both defensive and opportunistic. It protects you from the common failures of emotional decision-making and speculative manias, while positioning you to capitalize on the market's greatest force: the long-term growth of great businesses. Integrating this blueprint into your personal financial life is the most critical step you can take to move from the failing 90% to the winning 10%. The process begins with your mindset. You must first accept that building wealth is a marathon, not a sprint. You consciously reject the allure of quick profits and embrace the quiet, methodical process of wealth accumulation. This mindset shift allows you to implement the strategy. You start by following the data, creating your personal checklist of financial metrics to screen for high-quality companies. You become a student of business, learning to read financial statements and identify the signals of a durable competitive advantage. This research phase is your new foundation, replacing the old foundation of hype and headlines that led to poor decisions. With your research complete, you execute the buy boring, scale smart strategy. You identify a handful of these resilient, cash flow-rich companies and begin building your positions using a disciplined approach like dollar-cost averaging. You set up automatic investments to ensure you are consistently adding to your portfolio, turning volatility into your friend. You are not trying to time the market perfectly, you are focused on time in the market. Every contribution, no matter how small, is another brick in the fortress of wealth you are constructing over a multi-decade timeline. You are executing a simple, repeatable plan with unwavering consistency. This entire system is held together by the overarching principle of thinking in decades. This long-term view gives you the strength to stick with your plan during market downturns, and the patience to let compounding work its wonders. When others are panicking, you consult your data-driven research and see a buying opportunity. When others are chasing a hot trend, you stick to your boring businesses, confident in their long-term value. This integrated blueprint is your path to escaping the cycle of failure. It is not a secret formula. It is a strategic framework built on timeless principles that have created fortunes for those with the discipline to follow them. We began by confronting a stark reality. Most investors fail, not from lack of intelligence, but because they're unknowingly playing a rigged game. We've dismantled myths that lead to failure, exposing destructive patterns like overleverage and emotional decisions. This journey provides a new map, a winning formula built for long-term success. It starts with data, ignoring market noise, making evidence-based decisions, invest like successful wealth builders, buy boring businesses, scale smartly, and become a part owner of resilient enterprises. Turn market volatility into an ally, systematically lowering costs and increasing ownership. This strategy is held together by thinking in decades, allowing compounding to work and viewing downturns as opportunities. Become the architect of your financial destiny, equipped with a blueprint to win. The journey to strategic investing is a profound transformation. It's a choice to trade short-term thrills for lasting satisfaction. Success is a result of deliberate strategy and unwavering discipline. These principles are your blueprint to navigate the financial world with clarity and purpose. This path builds a life of freedom, security, and impact. It's about creating generational wealth and a lasting legacy. A community provides support, accountability, and shared knowledge. It's a shield against market noise, reinforcing discipline and accelerating learning. This is your invitation to choose a different path. Adopt this blueprint, commit to the discipline, and build sustainable wealth. Join us. This is your blueprint to win. The journey starts right now.